If you're ready to go, let's learn a little bit more about is once a year enough for a physical inventory? Take it away.
All right. Thank you. Thank you, Kim, and welcome everyone. So I get asked this question around this time of year, pretty much every year for the last 15 or 17 years. And the question is, we've done our full physical inventory and we went through the process and we found huge discrepancies between various products, different categories, and things like that. And the question is usually posed, is once a year enough for a physical inventory? And the simple answer to that is no. Once a year is not enough for a physical inventory. And the reason that once a year is not enough for a physical inventory is that the physical inventory process is only part of a greater inventory management system. When you're going through your physical inventory and you're finding those discrepancies are coming from somewhere. And so what I'd like to talk about today is a full inventory management process whereby the physical inventory itself, being just one small part, is something that you may not even need to do if you can follow the rest of these steps completely and accurately. So the five key pillars to inventory management is, first, you need to understand your demand. And that includes things like sales forecasting, what your sales history was, and understanding any special events that may be coming up. And then there's the resupply aspect of an inventory management system. That includes purchase orders, supplier management, who your suppliers are, what their different requirements are for ordering from them, and then invoice tracking. And the invoice tracking aspect of it helps you make sure that your suppliers are getting the product to you on time and that you're paying them on time and that you're taking advantage of any discounts that they're giving you for early payment and things like that. The third pillar is going to be understanding what inventory turns are. And inventory turns is how often your inventory cycles through. That leads to how often do you need to order it. And the tools that help you with that are, having something as simple as the min-max system set up so you know at what point you need to reorder and how much you need to reorder. And again, understanding the lead times from your suppliers as well as other inventory movement. And those are things like handling damages, transfer in, transfer out. The fourth pillar is the one I'm really going to focus on the most today, and that is because it relates to the physical inventory aspect of it, and those are cycle counts. And there's different methodologies for determining how to do cycle counts, but basically with a cycle count, you're going to count a subset of your items on a regular basis. So rather than counting the entire store once a year, a better methodology is to count smaller sections of your store multiple times throughout the year. And then the final pillar is process auditing. And process auditing is pretty straightforward, but it's one of the more difficult aspects of having an inventory management system that's going to work for you. And that includes identifying the source of any issues that you've encountered, developing a fix for those issues, and then the hardest part of this entire process is actually implementing the changes to make your system run smoother. So the first thing we were going to take a look at is identifying demand. So demand forecasting has the highest potential savings for any of the principles within the inventory management system. And those include things such as sales forecasting, sales history, and special events. Now, sales forecasting is where you are going to project the availability of sales revenue based on historical sales data, analysis of market surveys and trends, and your own personal estimates of what you think will go on. And you want to look at sales history to back up your own personal beliefs of what you're expecting to have happen, with also keeping an eye to special events. It's sometimes surprising how customers of mine will call me up on a Friday and tell me, hey, we're going to have this big sale tomorrow because there's a special event going on in our town or something like that, and they just basically completely forgotten about it. So if you can keep track of those events and understand what's going on and plan for them, that'll help identify your demand, and it'll help you plan things out, get extra product, potentially buy a larger bulk of product from your suppliers and getting discounts and things like that. So since we are looking at this from an RMH perspective, there are different ways in which RMH can help identify this demand. The first of which is the reporting system. RMH has over 20 sales reports out of the box, and it is an easily customizable reporting engine, as well as it's pretty straightforward to create new reports. Now, I understand that a lot of people probably don't want to get into the weeds of the specific details in which tables report information comes from and things like that, but the RMH interface is pretty straightforward in that regard, and we can definitely help you with that. And then there's the KPIs and sales history is peppered throughout the RMH software. You have the ability to see the sales history for particular items, and you can see their profit margins, and you can refer to that information as you're making decisions about what the demand is going to look like. So you'll have the reports, and you also have an interactive aspect of the RMH system. And then one of the third great things about the RMH software in helping develop this system is that you can easily connect to RMH with third-party tools. So if you're familiar with Power BI, or you have SSRS, SQL Server reporting services tools available to you, and you're used to working within them, you can use those tools to connect into RMH's open database, providing you give the authorized security credentials and things like that. And then it'll allow you to use tools that you are already familiar with to work with RMH data. So the second pillar is managing resupply. Now, resupply is significantly important simply because, according to Nielsen research, 70% of purchasing decisions are made in front of the shelf. So if your product is out of stock, you're out of luck. Especially amongst millennials and the younger demographic, is if they're less likely to have store loyalty and more likely to have brand loyalty. Whereas baby boomers, if their particular brand is out of stock, will look for something similar or can easily migrate to another brand. When it comes to the younger generation, they are significantly more likely to search their brand in another store, potentially one of your competitors. So it's vitally important that you have product in stock to keep your customers in the store. Some of the easiest mechanisms for maintaining your stock accurately is to use a purchase order system. I have way too many customers who come to me and we start discussing purchase orders, and they're not using the tools available to them within their point of sale system or within their ERP system to manage purchase orders and to then track purchase order receipts. They'll have a complex series of spreadsheets. I've worked with some that literally have printed out the order sheet from their supplier, and they just fill in the numbers and then they fax that into their supplier. Another thing that you want to be able to do to manage resupply easily is managing the supplier information themselves. So you want to be able to track what the different supplier pricing is. You may be able to get product from multiple suppliers, and they could have different supplier pricing, and they can have different minimum order requirements and master pack quantities and things like that. So supplier management is vitally important to being able to manage your supply chain and managing resupply. And then you also want to be able to track the invoices. So you want to be able to link an invoice to their particular the particular supplier, and you want to be able to match your purchase order receipts with those invoices. And you want to be able to do this in a simple fashion that allows you to see, okay, yes, I in fact did order $300 worth of product from this customer, and they sent me $250 worth of product, but but then they billed me for the full 300. I only received 250 worth. And so you need to be able to look at those things in a clear, concise way and keep track of exactly how your suppliers are treating you. In the same way that you want to take care of your customers, it'll help to get in the mindset of you're the supplier's customer. And so you should expect them to treat you honestly and fairly in the same way that you would treat your customers. Now, some of the ways that the RMH software can help you with this is RMH has a very robust purchase order management system. And so it can do things as simple as just you filling out a PO similar to what you were doing on a piece of paper. However, it's now electronic, and so you can go back on it, you can search on it, and you can run reports against it and see exactly how the supplier is doing. But RMH can do even more than that, is it can make recommendations based on particular settings that you have in the system. So a purchase order requisition could be set up where you're looking at the min-max, or you're looking at how many products you sold in a particular time frame. You can keep those old POs electronically. So if you have a supplier that you're only ordering from once or twice a year, you would be able to easily go back and look at what did I order, when did I order, and things like that. RMH also has the ability to track individual PO receipts. This is vitally important when you're working with a supplier who may not be able to ship everything to you at one time. You order 100 of an item, but they're going to ship it into you in 4 different shipments of 25 apiece. To be able to track exactly when, how much those individual receipts are going to be invoiced for and things like that will go a long ways in helping you manage your purchase order process. Another aspect that RMH takes advantage of is in supplier management. You can track your complete vendor history. And that lets you look at things like, is this vendor always getting wrong with their invoices when they send it to me? What is their shipping history? What are they charging me? Are they giving me a price list and then invoicing me at a different amount and things like that? All of that can be tracked inside of the RMS system, and you can do things like assigning the master pack quantities and assigning the minimum order quantities on a per supplier basis, so that if supplier A can get you a better price, but their minimum order quantity is twice as much as another supplier, but you don't see your forecast, is my screen still showing the actual PowerPoint, or did it go back?
It is showing a PowerPoint, but it's back to the front page.
Interesting.
Also, Butch, one other thing too is a couple of folks have pinged me about what is RMH, and can you just step back and explain that a little bit as well?
Yes, definitely.
And I can see your screen now, just fine.
Okay. RMH is the retail management hero software that has been developed by Retail Realm and Retail Hero, 2 companies that have spent a long time as the both distributor and third-party plug-in application developers for the retail management system product from Microsoft. RMS, or Microsoft Dynamics RMS as its full name is known, has been it's been a very popular point of sale system from Microsoft, but unfortunately that product is coming to its end of life, and Microsoft is looking to have their existing RMS customers move to one of their flagship products that's based on Microsoft Dynamics AX, and that product isn't well suited for single stores and smaller retailers. So Retail Realm and Retail Hero came together and they developed the Retail Management Hero product. And that's the product that we're directing most of our RMS customers towards as the replacement for RMS as it goes into full end of life in 2021. The RMS product, the Microsoft point of sale system, it is in right now what's called extended support, and that means that no new customers can purchase it. So if you already don't have it, you wouldn't be able to purchase it. We would look to put the RMH product in for you. So I hope that helps explain what the RMH product is.
Thank you.
Sure. So aside from supplier management, one of the things that RMH has included that RMS didn't have was an invoice tracking module. So you can easily link invoices to their suppliers, and you can track invoice numbers linked to their purchase order numbers. And you can track invoice charges separate from invoice items, and then RMH will suggest PO receipts that match those supplier invoices. So you would be able to create a purchase order in your system, and then as the product is being received, you create those PO receipts in your system, and then when you get the invoice, you can link that invoice to that purchase order, and you can link those individual receipts to that invoice, and so that can give you a complete picture of exactly what you ordered versus what you received versus what you've been charged for. So identifying inventory turns. Inventory turns is one of those terms that typically has different definitions depending upon who you're talking to. Some people look at it in terms of individual items. What is the turn rate of a particular product on a shelf? Others look at it as what the inventory cycle is, or how many times you replenish your entire inventory for a given year. That's sort of the standard definition, is what is the turns based on a entire year. But you can also look at the turns down at the individual level. And I was introduced to the inventory turns and the inventory turns concept when I worked for a fireworks company. And that's when we started looking at min-max, and we started looking at this large tent that we would set up every year. And inside of this large tent, we had those little poppets that you throw down on the ground and they snap. And we found out that we were cycling through the level of display. We were cycling through or replenishing that display 5 or 6 times throughout the day. And so in looking at the data, we were able to set up a min-max. We made the display slightly bigger so that we were only replenishing the display once a day, and we found a 22% increase in sales. So inventory turns isn't just a number to look at from an investment or from a P&L standpoint. Inventory turns is also something that you want to look at from an individual item standpoint, and that can help you determine whether your displays are too big, if you're only cycling through your turns and having to replenish this display once a week, or if your display is too small, if you're only cycling through, or if you're cycling through it multiple times a day. Your man hours might be better used in creating a larger display and allowing your sales staff to actually interact with the customers rather than just putting new products on the shelf. So knowing what your min-max is can help with both of those pieces of information. When it comes to inventory turns, you also want to know what your lead times are. How long does it take a particular vendor to get product to you after receiving the PO? And so that will help determine what your min-max is. And min-max is the minimum you need to get to, so that when you fall below that threshold, you would want to reorder more. And the max is, what do you want to reorder to, so that you have enough on the shelf until you can make your next order. And lead times play significant into figuring that out. And then you also need to, in understanding inventory turns, other inventory movements. Do you have an off-site warehouse? What's the lead time of getting the product from the off-site warehouse back to you? What sort of transfer in and transfer outs are you doing? And how are you tracking damaged and returned goods? Are you just, excuse me, are you just expecting to pick up your damages and see that as a shrink, doing a once-a-year physical inventory? How exactly are you managing tracked, or how are you managing damaged and items that are returned? If you have items that are returned, are you putting them back on the sales floor? Is there a process for revalidating those items before you put them back on the sales floor? And again, the RMH software can help you with these things through a very robust min-max system, and that min-max system, once you work through it and get it going to the point that you feel comfortable with the numbers, you can use that min-max system to help with the PO suggestion process, so that they'll make suggestions based on those POs. And in making the suggestions on the POs, it'll work with your min-max. It'll work with what's the master pack quantity from that particular supplier. The supplier A, are they willing to ship you in units of 6, but supplier B is only willing to ship you in units of 12. It gets into the minimum order quantities from a particular supplier as well. And so it'll use all of these pieces of information to help you make your purchase orders in such a way that it maximizes the amount of products you get when you need it and being able to put it out on the shelf. But there is other inventory movement that the RMH software will track as well. There's offline inventory tracking, and so what you'll be able to do is you can set up reason codes within the system so that if you return a product and it might be damaged, it can go into a separate bucket of offline inventory. And then this is something that you can periodically review and then easily transfer those items back into the primary inventory. You can transfer it out back to the supplier if you're going to get credit for it. You can also track any sorts of transfer ins. So if you're not getting your product from a supplier, if you're getting it from another partner, or you're just sort of, it's materializing out of thin air, you can transfer that inventory in rather than having to do a full PO for it. But RMH goes further in that it fully supports a buy-down quantity and pricing. So if you're going through your demand forecasting and you realize that you have way more product than you need, you could set up the buy-down quantities and pricing. So if the normal cost or the normal price of an item is, say, $10, you'd be able to sell 50 of them at $8 to get rid of them quickly, but then have the system automatically go back to full price. There's also 40 different wizards within the RMH software that lets you make mass changes to the item information. So you'd be able to go in and set price limits. You'd be able to go in and adjust item quantities, and you'd be able to go in and in mass do buy down prices and buy down quantities and make changes. So the RMH software is going to help you manage your product. It'll help you manage your products in an easy and intuitive system. There's also purchasing limits, and you can schedule sales and have flash sales. Again, all of these tools are there to help you manage the RMS, excuse me, you'll hear me say that more than once. The RMH will help you manage your inventory and help your overall inventory management process. So the next pillar, and this is the one that I get asked about the most, is the cycle count. So what exactly is a cycle count? So the cycle counts is a process of continually validating the accuracy of your inventory. And you want to do this on a regular basis by counting a portion of your inventory on a daily or weekly schedule rather than counting all of your inventory at one time. There's a few different methodologies that are out there for determining which items to count in a cycle count. So we have what's known as ABC analysis, and this one is the most complex, but it's also the most common. So in an ABC analysis, you're going to group items based on the importance to the organization. It doesn't necessarily mean it's the ones that you sell the most. It doesn't necessarily mean that it's the one that you have the most of. It's something that you need to determine within your organization which are the most important. And a good example of that is if you are a small convenience store type retailer and you're selling cigarettes. Cigarettes a lot of times are one of those products that tend to disappear, and so counting those cigarettes and tracking those cigarettes on a daily basis or even a shift by shift basis is not an uncommon practice. It may not be the biggest seller, but it could be the area that has the largest opportunity for theft. So it's the level of importance to the organization. Another methodology that's very common is basically the 80-20 rule, which is known as a Pareto principle, and it's not just something specific to retail, but you'll see 80-20 rule used in a lot of different places. But basically for retail, what that says is 80% of your sales come from 20% of your items. So if you're not too keen on going through, or you want to start simpler, you can look at just your top 20% of your items and you can count those on a regular basis. If you could look at them in terms of sales or quantity or turnover, item terms, however you want to look at that. But the key to any of the systems that you come up with is to have regular scheduled counts. Whether you decide on a daily schedule, a weekly schedule, a monthly schedule, or even a quarterly schedule, any of those schedules will still be better than the once a year inventory model that so many of my customers have been using. And the part of doing the regular schedule is that you want to count the same items on the same schedule. So if you're counting your group A set of items using the ABC analysis and you're counting those, once a week or once a month, you want to make sure that you're using the same cycle to count those again. What that'll let you see is that'll let you see the trends over time and what is going on. And it'll also help with minor discrepancies that show up. If you're counting your A items once a week on Monday and you have a product that may be misplaced in the store, or you have an extra case lost in the back. When you're doing your full physical, you'll spend a lot of time tracking those things down. When you're going through a regular cycle count, you'll be able to pick those changes up over the course of, say, 3 weeks or a month. So you may be over by a certain amount on your first count, under by a certain amount on your second count, and now you're back over again because that case was hidden somewhere and you found it later. But you'll get that view of what's going on. So to break down the different methodologies a little bit more, the ABC methodology is A items are the items that you have very tight control and accurate records are what you're needed for the A items. The B items, you'll have less tightly controlled and you'll have a good record. And the C items are the simplest and you basically have minimal records for that. We have a lot of gift shop customers and they'll sell used to be called penny candies, but now they're referred to, and now they're 10-cent candies or even 25-cent candies. But those things come in bulk. And a traditional full cycle count, or I'm sorry, a full physical inventory system would have somebody counting out all the individual penny candies and trying to manage those inside of the system. But when you look at and group the items together, you'll notice that those C items will have a huge inventory, or those penny candies will have a huge inventory, but they don't generate a lot of revenue. They're just a little add-on. So is it worth spending the time to track those as much as some of the more high dollar items that you might find in a gift shop, whether it's jewelry or camera, not film so much any longer, but batteries and things of that nature that might be an A-type item. So that's the basics of breaking down the ABC methodology. The 80-20 rule, again, that one's pretty simple, and that's where I would recommend somebody who's never done cycle counts or never really looked at their inventory start with, where basically you're just taking your top 20% of your items and you're counting those on a regular basis. And again, the scheduling is important. Whether you do it daily, whether you do it weekly, monthly, or even quarterly, you're going to see a benefit over just those once-a-year inventories. And a lot of that benefit will come from the rest of your inventory management system. Are you not receiving the product when you should? Is somebody not counting the product when they receive it, and things like that. So as we move on to the fifth pillar here in a little bit, that'll become more clear as to why that regular schedule will make more sense for you. So to expand on some of the cycle count methodologies, these are just some things that we've picked up over the years and that help in maintaining an accurate inventory. So you need to make cycle counting part of your daily or weekly routine. If you just come in, turn the lights on, unlock the doors, make some coffee, do a cycle count. If you're only cycle counting sporadically, you're only going to get sporadic results. You need to have that regular, repeated cycle count process so that you know exactly what's going on. If you're getting everything from your suppliers once a week, and you have a once a week order and it's coming in, then having a more sporadic system isn't going to be as detrimental to somebody who is getting supplier A comes in about once a month or every couple of weeks or every 6 weeks. Having that continual cycle count routine allows you, again, to see over time where are the discrepancies coming from. I like to use, especially in the beginning part, a 13-week cycle count calendar. And 13 weeks works out good because that gives you 4 counts a year. It's sort of a quarterly thing. And so if you can count all of the product in your store at least once every 13 weeks, then you could develop a trust in your inventory to the point where that store closing, everybody works overnight, full physical inventory may not even be necessary. Some of the keys to obtaining an accurate count is that you need to prepare beforehand. You need to make sure that your displays are filled in, that your products are organized, that their facings are the correct way, that your hooks are easily accessible so that you can do the counting. You want to organize your understock, your backstock, things like that. Having a regular, dependable cycle count will help your store look better. It'll help it'll help the personnel in your store understand where the product is and know how to replace it. So when you have an empty hole, they know whether or not they have more in the back because they've recently counted it. If you're only doing physical inventories once a year, it's very easy for product to get lost in a back room or in a warehouse or things like that, or even underneath the shelves themselves. Another key to doing the cycle counts, and this is the same as full physicals. Again, it looks like that popped back. Let me. Another key to doing the full, whether it's full physicals or cycle counts, is you want to make sure that you close out any open inventory transactions. So if you are receiving a PO and you haven't gone in and actually received it into the system yet, but you have in fact put the product out on the store, on the shelves or in the warehouse, then you need to go in and make sure that those are closed so that you're counting against accurate numbers. Again, the regular cycle count system sort of forces you into making sure that you're closing out your POs, making sure that your receipts are in place, making sure that you're tracking your invoices, and doing that on a regular schedule. It is significantly easier to go back and see where a discrepancy comes from if you're only looking at a week or 4 weeks worth of data rather than trying to figure out where's that PO I missed 6 months ago if you're only doing a physical inventory once a year. And then cycle counting inventory on the sales floor can be a little bit difficult, and that's why you typically want to start your cycle counts during your slowest time. If you're super busy in the morning but you're not in the evenings, do your cycle count in the evening. If you're more of an evening business, do your cycle counts in the morning. But the key to doing that, especially in the beginning, is to start small. Don't try and do cycle counts on your entire store. Pick a couple of items. If you're looking at the ABC methodology or if you're looking at an 80-20, go to a 95-5 where you're only counting the top 5% of your items. Or if you have a particular item that you're concerned about, start the cycle count process with that item. You just want to make sure that you pick an item or pick a set of items that you receive regularly and that you order regularly, so that you're able to go through the entire process for a few cycles, and then you can start expanding to the next set of items on your list. So what can RMH do to help with your cycle count process? So again, it's the reporting engine. Very robust, very excellent reporting engine that will allow you to create customized reports if you want to look at your data in a specific way. But RMH also has a stock take software. So the stock take application is a separate application. Unlike RMS, it's not integrated into the headquarters piece, so it will allow you to install just the stock take on a laptop to go around your store or to have multiple people access it at one time. RMH also can import handheld data, and the stock take application can take care of that, so that if you have little handhelds, data collection devices, barcode scanners on them, and they can generate a file, you can import those directly into the RMH stock take. And another thing that it allows you to do is you can create your counts in advance of the count day. So you could have your cycle count processes and which counts are going to be done set up in advance, so that when the people come into the store, they just look and say, okay, here's what I'm counting today and here's how I'm counting. And so the fifth or the final pillar that I want to talk about is process auditing. And this is one of my favorite quotes: the math is easy, the psychology is hard. And so it's easy for us to look at this and say, yes, we definitely want to follow this process, all of this is good. The hard part is actually doing it. And that's where running through the process auditing process can make that a little bit easier. So the first thing you want to do is you want to identify the source. Are your orders not being received in a timely manner? Is there a process for handling damaged items? Are unauthorized people making adjustments? Or is your security set up in such a way that anybody running a cash register can go in and just change the quantity for an item? Those are some of the questions that you want to ask yourself. Then developing a fix. A fix for the issues can either be procedural, it can be software, it may require, your business process may require a customization to the particular software itself. So when developing a fix, you want to reach out for support, and you can, to the software vendor, you want to reach out for support to other retailers, whether that's through user groups, and user groups surrounding your particular software will definitely get you in touch with people who are running into the same issues and trying the same processes that you are. But then the last step is to actually implement the changes, whether that's retraining users who are having trouble, or even just starting the cycle count schedule. Implementing the changes is going to be the most difficult part of the whole process. So in this regard, what are some of the things, how can BMI help you with your auditing process? And we've been doing this for over 30 years, working with retailers and other businesses and using their software and managing inventory. And so we have the experience to help identify the sources of an issue. And I like to put this out there, but we all like to think we're very special and unique and original in what we're doing. But in the last 17 years of working with hundreds and hundreds of different retailers, I've come to know that there's not a lot of differences. And I know it's not popular to say retail is retail, but there is some pretty basic concepts when it comes to the supply chain management or the inventory management of retail. And that is, you're going to be creating POs, receiving POs, matching the invoices, doing cycle counts, stock take, that kind of stuff, managing damages. So you're likely not the first one to see a particular issue, and we likely have solutions or methodologies that we can help you with. The developing a fix aspect of it, again, we have a lot of different software that we support. We have a vast network of partners that we can reach out to for additional suggestions and additional support. And we also have a fully staffed development team that can help you customize the software that you need, customized for your particular business case. And then actually implementing the change. Training and retraining and making sure that the business processes are being followed, that is something that we do on a daily basis. And so we can definitely help you with the training aspect if it's a train the trainer scenario, or if you want us to train your staff specifically on-site or remotely. Those are all things that we can definitely help you with. And so just as a recap, the inventory management summary, you want to look at your demand, you want to know what you will sell, and you want to know what you have sold. From a resupply standpoint, you want to be able to track your purchase orders and track your inventory, invoices. You want to know how much you can carry from an inventory turns perspective, and you want to monitor item movement, not just sales. So that's damages, transfers, things of that nature. Cycle counts, if you get nothing else out of this, counting more than once a year, even if you don't do the rest of it, will significantly improve the accuracy of your inventory and will help you keep the products that the customers want on the shelf when they want it. And then running through the process audit. Identify the source of the issue, develop a fix, and then implement the change so that your system can run through an iterative process where you do the cycle counts, you find the discrepancies, you identify why there was a discrepancy, you develop a fix for that so that you can mitigate those discrepancies, and then you implement that fix so that the next time you run through the inventory management process and the cycle counts, hopefully your fixes will have rectified the issues that you see repeated. At that point, are there any questions?
All right, excellent. Well, more importantly, let's bring up the poll and let's ask folks. Again, there are a number of solutions even within GP or NAV. I know some folks that are on the line here are not using RMS or RM Hero. So I just want to make sure that folks understand that a lot of these principles that Butch talked about is appropriate. Made me think, my husband and I owned a retail business, and it was a tackle shop, believe it or not. And when you were talking about this, it makes a lot of sense to me. So let's go ahead and have folks vote here, and let's see what you guys think. Are you interested in taking a look at RMS in this next year?
RMH.
Or RMH, I'm sorry. I got that wrong too. RMH. Sorry, everybody.
And I may have sent it to you the wrong way. I've been working with RMS for about 15, 16 years. So
Yeah.
Going from RMS to RMH is it still trips me up a little.
Sounds good. Well, it doesn't look like anyone's participating, and yet we have folks out there. So I don't know if I've got a little bit of a snafu in this poll. So again, let me just say that do get in touch with us here at InterDyn BMI if you'd like to learn more about RMH and also what the transition is. We've got a number of webinars that Butch has done over the past few months. So go and take a look at our YouTube channel so that you can get caught up on some of the news and information that would be appropriate for you if you are an RMS customer. Anything else, Butch, that you want to add?
Well, I see one of the questions that came in is they're a distribution company, so we're not sure if this applies to us. And it depends on the warehousing aspect of you as a distribution company. While this is tailored more towards the retail side of things in the RMH software as a whole, BMI has a lot of experience with warehouse management and distribution management and other ERP systems, whether it's Navision, AX, and others that could be the software that you're working with in a warehousing environment. But the practices and methodologies of tracking the inventory, tracking the purchase orders, yes, that's definitely all very relevant to any time you're moving product in and out of a building, whether that's putting it on a truck and sending it to your customers or the customers coming in. The inventory management methodologies are going to be really similar. There'll be specifics that you'll need to look at in terms of B2B environment versus directing or dealing directly with customers, but at the top level, those methodologies are all the same.
Excellent. All right, Butch, thank you so much. And again, any last words of advice before we let folks go?
Just cycle count.
There you go.